Hey everyone, Frank Ochoa, aka Pivot Boss here. Before we get to your scheduled content, I'd like to take a moment to talk to you about my book, Secrets of a Pivot Boss. If you are new to Pivot Boss, I'd like to invite you to visit pivotbosscom/secrets of a pivot boss to learn more about why traders all over the world have called my book one of the best trading books for traders. All traders, from scalpers to investors, can use the concepts and techniques in my book, which has made the book a universal hit. The book is currently on sale at a 30% discount and comes with a 100% money back guarantee, so the time has never been better to own your very own copy of my book. Please visit pivotboss.com/secrets of a pivot boss to order today. Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for February 25th, 2016. I am Frank Ochoa, aka Pivot Boss, with your analysis for the session. Looking at the ES here in a daily time frame. You can see prices. We talked about that narrow 4-day range. It broke to the downside in the previous session here, came down into very close to our primary bear target for the week and the 1871 key level. We talked about if price gets down here, this is going to be the last saving grace for bulls to potentially squeeze for another move higher. Anytime you reverse off of a key low like that and rally strongly, any pullback usually back into the previous highs here could make for a solid area of support, which then could be used to fuel a short squeeze to the upside if trapped sellers come in. And it became apparent here that we had a significant sell-off here. A lot of sellers came in the previous session down on these lows, and then you saw a massive short squeeze back toward 1930. So a big-time move. Now you can see prices sitting right above the 1921 MCVPOC, and that's important. Price is sitting above that zone. We're still in a key range though. We haven't really broken out of this range in a short-term view, but any push beyond 1950 now and holding above 1921 would suggest a continuation into the upside key targets here. We have obviously 1950 is the next one above. We have 70 and 91, and those could easily be reached here upon a push through that 1939 half. So that's still an important zone to watch out for. Overall, we're still holding here. We have not been able to get above this zone since the second week of January. So there are a lot of buy stops above this zone that could easily fuel a move back higher, with key targets at 2007 and 2075 ahead. But first things first, we got to see how price materializes out of this current range. Looking at the intraday time frame for the ES, right now you can see 5-day VPOC is up here at 39.5, rather 39s. That's important to watch out for. We're also holding above 1921. That's the key level, right? The HVN from the higher time frame is at 21. So we basically have our edges for the range already set up today. 1939.5, 1921s. Any push below 21s could be seen as an opportunity to defend back up. Any failure to hold above 1939 could be a move back down. So it could be a trading range type of market here after the previous session's big time squeeze. Again, if price can push through 39.5, this is 5-day VPOC here, 39s. Pushing through that level would suggest a continuation into the previous month's high at 1964.75. Any rejection of those price levels could auction price back down within the 5-day profile. Let's look at crude oil now. Here's crude oil in a daily time frame. This is the one perhaps that helps spark the move, because what we had here was price testing the price levels below the previous month's low price, rather the previous week's low price, 31.02s. And I talked about before how the previous week's range was going to be very important, especially given how prices have chopped and traded within that zone. We saw price push below the previous week's low here and failed to hold. And I mentioned that before. If there's any failed range expansion below the previous week's low, that's a quick push back to value at 33.65 with a likely test at the opposite end of the range at 34.21. We're already seeing some of that now. As a matter of fact, the push below the previous week's close now in pre-market trading has also been defended. We kind of have an inside day going on. So I would say any push beyond these highs here could lead to a quick squeeze back into 33.65, which is the MCVPOC right now. Now again, anytime you see a failed range expansion the way we did here below that key range, the expectation was for a quick push back to the midpoint of that range, and we have yet to see that materialize. So getting that push up and then getting a pullback that's defended here with a failed range expansion below the previous week's low could be the fuel required to push this thing into the midpoint of the key range at 35.75. Here's a look at the intraday time frame. On an intraday basis, you can see prices have been chopping in ranges and then seeing expansion, and then another range and perhaps expansion. We've seen this time and time again. Here's a range, back up. Here's a range, back down. Here's a range, down. And so right now we're building that energy within the range. So 31.63 to 32.46 is a key range. Outside of that range sparks the next key move. I would say any push into 31.63 offers an opportunity for bulls to defend for a shot at squeezing into these upside targets through 32.46 and into 32.95 and 33.49. Any failure to hold above 31.63 opens up a retest back toward 31.02, which is a big time important level to watch. All right, taking a look at gold futures here. Gold has pushed higher the previous session. This is what I talked about before. We had a move all the way up into previous highs or very close to it. I talked about watching the profile. Anything above this zone, very, very clear rejection, and we could be headed back down. So prices tested above the previous week's high and was rejected the previous session. So I mentioned before, if price comes into the previous week's high in overnight trading, look to sell it. Look to defend 1240.6 for a shot at seeing a move back into 1196.50. We did have a VPOC shift up. Composite VPOC was 1196. It has now shifted up to 1225.30. So that's going to be very important to watch right now. As a matter of fact, I can add that line. Basically just duplicate this line here and call it 1225.30. Let's do that now. There it is. Composite VPOC, there it is. We can go back and rename this one over here MC VPOC. So now it's an MC. And there you are. So now we have 1225.30. So we have a very clear level to watch here, especially intraday. If prices can't hold this level, expect the downside sell stops to lead into 1196.50. All right, taking a look at the NQ on a higher time frame. You can see here basically this one pulled back significantly into the midpoint of the key range, 40.85.75. So price rallied significantly into our 42.26 precisely off of a rejection off that previous key range low, 38.93.5. Then we saw a pullback into 40.85.75, and that's the exact midpoint of that key range, and went clear bid back toward recent highs. That's extremely bullish. A lot of bears came in here and they got squeezed and entrapped, and we're now seeing a price back at 42.26 and holding right now above MC VPOC at 41.91.5. That's important. That's short-term bullish. If prices can push beyond 42.26, it's open season to 43.09 quarter and perhaps even higher. So this is the top of the key range. Anytime you reject like this, you're likely headed back to the midpoint of the key range with a good shot at seeing a completion of the move across the range, and that's what we're currently seeing now. This squeeze right here, when price dropped down, late bears to the move, got trapped, and then you saw this thing roll higher. Right now that could slingshot its way to these upper echelon targets, 42.87, 43.09 quarter. On a weekly basis, our primary weekly upside target is still 42.52. The the secondary, which is the full range 100% target for the week. On an average week over the last 10 weeks, price will trade from this low to this high. That's the average range, weekly range right now over the last 10 weeks for the NQ. So right now you can see reaching the top of the range is well within the scope of the next 2 days leading into the end of the week for this commodity. So looking at the intraday time frame, you can see how that reversal materialized the previous session here. We have it well documented on the premium dashboard, in addition to sending out a post and tweets for it. A very clear move the way it happened, a solid push. The first pullback was nice, and then you saw a relentless short squeeze into 41.60, which was our primary target, followed by a push all the way into the previous week's high, 42.27.5. Just a significant rally. Now you see we have a very clear range here. We had this key range over here that helped us identify the targets. Came in handy, still is. I can take it off if I like and put a new one up based off the current impulse move. But you can see it's clear right here, 41.85 up to 42, call it 42.30. That's the zone for today. above 42.30 opens up the primary target at 42.58 with a shot at 42.84 as the upside targets. Any failure to see acceptance above 42.27 opens up a likely return back into 41.60, which is 5-day VPOC, for a retest. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session. Good luck and trade well.